Who got to watch the professor out there? Man, that was amazing. All right, so Lyn, you ready to have some fun?
I'm ready. Let's go.
All right. So when I think about the last 40 years and what people were used to when they think about what they see in a business cycle where the Fed comes in, they start raising rates, everything they suck the demand out of the economy, it resets itself, and then they do it all over again. And then more recently, you see that with QE, that's kind of the solution. But right now, do you see the current setup potentially being different than what I think everybody is expecting to see by them aggressively tightening? And do you see that bringing inflation back down to levels that people used to see, or is there something different here? Kind of quantify what you think that could be different this time.
So I think it comes down to like time frame expectations. And so if you look over the past 40 years, if anyone has seen like an interest rate chart, for example, you start out at a very high level after the 70s, and you have 40 years of lower lows and lower highs of interest rates. And that's allowed for higher and higher asset prices, whether it's real estate, whether it's equities, just higher and higher. And my thesis for the past couple of years is that we are entering a structural change where once interest rates get all the way to zero or negative in some countries, that there's really not much further to go, and debt is already super high. And so we're going to start entering this regime of sideways to higher interest rates, which means generally lower average valuations and generally just a lot more like turbulence in macro markets. It's not that constant 40-year bull market. It's not that thing of just things always go up. When we look at, say, for example, the U.S. stock market, stocks go structurally up over and over again, but there are like these long periods of time, whether it's, say, from the year 2000 all the way to 2011 by the time it surpassed it in inflation-adjusted terms, or you go back to the 70s, you basically had this choppy sideways stock market for over a decade, or you go back, of course, to the 1930s, and it took a very long time for the stock market to recover. And I think, especially in inflation-adjusted terms, I kind of think we're in that environment, and I think we have to think differently about the market regime we're in now compared to any time in the past 40 years. I think we're going to be in a more constrained world, less globalization, and a more difficult energy situation.
Yeah, so if they step in, let's say that something starts breaking in the credit markets, things start seizing up, and they have to step in, and we're still at these very high inflation levels, way higher than I think anybody ever imagined a year ago where we'd be right now. And so those things happen, and then they respond with what I would expect to be, and I'm curious what your thoughts are, an enormous amount of stimulus in order to keep that together. What does that look like? Does it look anything like what we've seen in the past where they're just flooding the market with liquidity, or is it much more surgical? Can they do it in a more surgical way? What are some of your thoughts in that area?
So obviously it's hard to see the future, and it depends on individual human choices, which is what makes it hard to predict. But I think the base case to at least be aware of, or to look for and expect, is a more stagflationary type of environment. We could very well be in an environment, like right now, for example, if anyone's seen the latest inflation print, the official inflation rate is at a very high level, but it is falling from its year-over-year peaks. And you see things like used car prices and house prices, they're kind of coming down, but we still have very sticky energy prices. And I think that's where a large part of the problem can be, right? So you can get certain things under control, certain supply chain issues, but we still have a structural underinvestment in energy. And when we look back over the past year, for example, we've had the Fed raise rates almost as fast as they've ever raised it. They've kind of rivaled, even though they haven't rivaled Volcker, the 1980s, in terms of how high interest rates got, they have rivaled Volcker in terms of how much you raise in a single year. So they've already been super hawkish. They've already drawn down their strategic petroleum reserve, which is trying to fight energy inflation. And I think a lot of that is now behind us. They're still going to raise rates to some percent more, but they've already drawn down the oil reserve so much. I think we're going to be in an environment of more problematic energy scarcity, higher energy prices, even if some other prices settle down for a period of time due to demand destruction or due to supply chain normalization. And And I think that's going to be an ongoing problem. And I think that the type of stimulus that they do is going to be a little bit more surgical. It could be energy stimulus. It could be things like that. It could be even the combination of higher rates combined with some sort of liquidity program, for example, on the sovereign bond market. And I think that's not going to be the type of all-out environment where just you buy every risk asset and it goes up. I think it's going to be a much more selective environment. You have to own quality rather than just own everything.
So something that pops out of all this is you have this dollar strength that is insanely aggressive compared to previous periods against all these other fiat currencies. Give people an idea, like your thoughts on 200 countries that have maybe really weak currencies relative to the dollar, and then all their dollar-denominated debt. Like, what's it like for these countries, for the people in these countries, and how does that tie into Bitcoin?
Yeah, I was actually going to say that's actually a good point to tie it into Bitcoin, because when we think of Bitcoin, we often think of it in a developed market perspective. We think of it as a United States person. We think of it as a European, for example. And people are like, why do you need Bitcoin? What is Bitcoin useful for? Whereas when you go to Argentina or Nigeria or dozens of other countries in the world, it's far more obvious why people need Bitcoin and why they might be interested in it, and why they might be interested in things like stable coins or things like ways to get US dollars, basically various types of harder money than whatever their local money is. And when the dollar gets super strong like it is now, the Fed is increasing interest rates, they're doing quantitative tightening, and they're trying to rein in inflation. And the problem is that there are so many countries in the world that buy commodities in dollars, right? So they're having a much harder time buying commodities. And then a lot of them have dollar financing. They have dollar-denominated debts from European lenders, from American lenders, from Japanese lenders, from Chinese lenders. These just dozens and dozens of countries in the world get squeezed when we do this. And imagine you're a country and basically another country can dictate your monetary policy for you. That's kind of the world we live in. And what Bitcoin comes around and does and says, here's an alternative. It's new, it's volatile, it's poorly understood, but it doesn't change its monetary policy based on the decision of a handful of people in a room. The Fed is basically a council of elders that sits around and determines the price of money, right? And Bitcoin doesn't have that. It's an open network. And so right now, kind of for lack of a better alternative, all the countries in the world, and especially the periphery countries, are tied into the dollar system. And so they're at the whims of the Fed. They can loosen dollars, and that usually what happens is these countries go out and they take on a lot more dollar-denominated debt, but then that comes back to bite them when the Fed can then arbitrarily at any time increase interest rates, strengthen the dollar, and it's like all of your liabilities are being hardened. And so what Bitcoin comes around and does and says, here's an alternative, and here's something that's worth exploring.
You've said to me the importance that you think it is that this is a grassroots movement. Share some of your thoughts on that and why you think it's so profound.
So I think most people here have heard of Bitcoin Beach, right? So that what was it, 2019 when they started, and they build this bottom-up community in El Salvador, and it's a small circular Bitcoin economy where a large percentage of the population is educated on it, they understand it. The Bitcoins are locally held. And, there's been a lot of focus on nation-state adoption. And I think that's healthy. It's obviously a big sign of ongoing structural adoption when nation-states adopt Bitcoin. But, of course, you can't impose education from top down. You can't impose buy-in from top down. And when we look at politics in general, grassroots movements are always more powerful than like who has the most money for financing, for example. If the candidate's not right, it doesn't matter how much money you throw at it. And it's kind of the similar thing. If people don't understand Bitcoin, it doesn't matter if the government mandates it or not, or mandates its legal tender. And so I think nation states can do a lot by making it, not a taxable currency, but I think that actual adoption has to come up from these much smaller communities. And one thing we've been seeing over the past year or two, especially the past year, is that they've kind of replicated the Bitcoin Beach model, where you have Bitcoin Lake, you have Bitcoin Island, you have Bitcoin Jungle, right? There's little communities popping up in Costa Rica, Guatemala, Vietnam, Isle of Man. There's basically all these different little communities popping up, and I think that's only going to accelerate, right?
Do you think that the energy piece where they're able to mine, maybe they have access to some natural resource that's not being used because there really wasn't a way to kind of use it with like you can with Bitcoin. Do you see that kind of being a source for it to stand up more organically than maybe having some philanthropists that step into a specific area and are trying to really push it? Do you see it being more organic through energy?
It's a good question. I kind of view energy as almost the secondary part, because so far we've not really seen, like so far if you look at those communities, those are popping up quicker than mining in those jurisdictions. Mining is capital intensive. I think one way to phrase it, and I've actually spoken with Nick Carter about this, is that stranded energy is pretty evenly distributed globally, but rule of law for capital is not, right? So if you're a miner, you're perhaps more hesitant to go into certain jurisdictions than you would be in jurisdictions with a much stronger history of rule of law and not confiscating assets and things like that. So it can actually be hard to do capital intensive businesses in certain countries. And I think there's a lot of opportunity there longer term. And there are companies exploring that. I'm really excited for that. But I think the lower capital cost kind of early thing is to make the local community, educate them about Bitcoin, help them, reach out to them, ask what they need. And then there are these companies like wallet companies and things like that that can go out and build these little local communities and work with them. I think that kind of comes first.
Do you find in a for-profit kind of way where international investors are going to be looking at these locations and saying, hey, they have access to cheap energy, I would like to invest, I'm incentivized to invest capital into this area that probably would have never been taken serious before, but because I can get the energy so cheap. And then you have just natural economic environment that's naturally standing up in kind of a cellular kind of way in a lot of these developing nations because of their incentive for-profit investment.
So I would love to see that. And I mean, if there's any like world leaders listening, if you make your jurisdiction attractive for Bitcoin miners, if you have, I think there's a lot of countries in Africa, for example, that they have a lot of renewable energy. They have a lot of cheap energy. It's totally untapped into hydro, just all sorts of resources. And if they make it clear that they're a Bitcoin jurisdiction, they're a Bitcoin-friendly jurisdiction, I think you can get that type of investment. And then the cool thing is, there's kind of a chicken and the egg problem with energy development, where nobody wants to say build the hydro dam because they're not sure if they're going to if there's enough demand in the community to sell that electricity to. So how do you justify the cost? How do you guarantee that you have an electricity buyer? On the other hand, if you don't have the electricity, nobody moves there, nobody can build manufacturing things there, so you have a chicken and the egg problem. And one of the things that Bitcoin is uniquely good for is it's a first buyer. It's a guaranteed buyer. So you can build a hydro dam and do a contract where Bitcoin miners come in and use that energy for a couple of years when it's super cheap. And then as that electricity is available in the community, you can then build more infrastructure, more people can come in, use electricity. And then if that cost of electricity goes up, then the Bitcoin miners say, okay, we're not needed anymore. It's not in our best interest to stay. They can leave, and then that electricity is there useful for the community, and then they can use Bitcoin miners to whatever percent still makes sense. So I think that Bitcoin mining is a useful bootstrapping technology, and just it needs the combination of more people to know about it and safe rule of law, so that when you do capital intensive, integration, that you can be assured that they're going to be respected.
So you had said to me that when we think about a grassroots, coming from the ground up type movement, to kind of think of it almost like you have a VC that goes to a startup and they give them a bunch of money, and the startup just goes and spends it on a bunch of marketing, and it's just total vaporware on the product and the service level down below. And the way to know whether you have a good startup is if it's organic from the bottom, a good product, service. It really doesn't need marketing. It's just naturally occurring. And you said good money should work like that. What do you think the health of that is today? If you had to do an assessment on Bitcoin, what do you think that assessment would be with respect to its ability to work its way from the bottom up instead of the top down?
So I think it's obviously a bumpy process. It's obviously a very volatile process, and it's hard to understand, but it's in an uptrend. I've had debates online, and most there's nearly 200 currencies in the world, and how many currencies are useful medium of exchange outside of their host country? If, like Egypt, for example, is a country of 100 million people. If I take some Egyptian pounds and I'm in New Jersey, what do I do with those Egyptian pounds? I don't even know if a bank would take them and convert them. Most banks wouldn't. It'd be very hard to actually find a way to use that to purchase anything or transfer anything outside of Egypt or outside of maybe a couple countries around Egypt. And then you can pick another example like Norway, for example. Norway's a wealthy country. If I had Norwegian currency with me in New Jersey or here in LA, what do I do with that? Right? It's not accepted outside of its like enforced monopoly area. I mean, you can eventually find a way, but it's very challenging. Whereas there are some currencies, like if you go to most countries in the world and you have dollars, you could find someone to take them off your hands pretty easily. It's not that hard of a process. If you have a gold coin and you go to most countries in the world, so you can eventually find someone to take that off your hand. It's not rocket science to find someone. And we're starting to, over time, Bitcoin is becoming a top 5 or, probably top 5, definitely top 10 globally saleable money, which means that if you have Bitcoin, especially in urban centers of the world, reasonably tech-savvy areas, you can find someone to take Bitcoin off your hands a lot easier than you can for many other fiat currencies of the world. I mean, it's out of the 100+ currencies, it's getting up there, and the trend is obviously heading higher. And I think we're kind of seeing the same thing when it comes down to these individual communities that are building up, right? I think those are more powerful than top-down attempted implementations. I think the more people in a community that understand Bitcoin, get educated on it, and then they see it firsthand. I mean, basically, it's like you need a critical mass of merchants accepting it, people wanting to use it, people saving in it, and then you get that circular community, and you go to an underbanked area especially, and they get the benefit right away. And I think it's powerful.
Yeah. And when you look at it primarily today with so many people using it as a savings technology, even the clearance, I know Pierre Rochard has been tweeting out just charts of how much physical settlement's happening, and it's something that everyone talks about market cap, and they don't talk about the physical settlement that's happening on an annual basis. And I mean, talking tens of trillions of dollars in dollar terms of how much settlement's happening. I think that the numbers it's kind of mind-blowing. I know it was for me when I took a step back. Do you have any other thoughts on, for people that, obviously we're in a room full of Bitcoiners, but I think it's important for them to be armed with talking points to maybe reframe metrics that maybe aren't as useful, like market cap, to physical settlement numbers. Are there any other metrics that you would like to highlight or?
So Bitcoin currently settles trillions of dollars worth of value annually. And even when you adjust it for, because, some of the money kind of comes back to, if you have an unspent transaction, it comes back to your own, where you sent it from. You can have that gross number that's, a little bit overstated. Even when you adjust for that, it's still very, very high. It's over $1 trillion and multiple trillions of dollars usually for annual settlement. And it's a huge network. And the interesting thing about it is that if you compare it to FedWire, which is the biggest settlement infrastructure we have in the United States, it's basically the Federal Reserve's interbank settlement system. Bitcoin and FedWire process approximately the same number of transactions per year. It's kind of funny how that works out. And you can kind of think of Bitcoin as the global open source version of that. And then unlike FedWire, it has its own gold attached to it, right? So FedWire is just settling fiat currencies that are then running on top of the Federal Reserve, whereas Bitcoin is basically a FedWire settlement network with also its own digital gold attached to it. It's a scarce unit that is also, doing that type of thing. And then the funny thing I like to point out is that, Bitcoin has had higher uptime than FedWire. What was it, 2021 when FedWire went down for a couple hours, and Bitcoin hasn't had a technical issue since 2013. Really, I mean, it's had some behind the scenes technical issues, but it's never actually had a chain split or some sort of interruption since 2013, and even that was very brief.
It's amazing. It's mind blowing. What are you excited about on the security side?
Like security for Bitcoin, or so. What I love about kind of the Bitcoin development in general is how security focused it is, right? So if you look at other ecosystems, quote unquote digital assets or crypto, it's kind of like move fast, break things, see what works, and worry about security later. Whereas Bitcoin, it's like everything is slow, deliberate, and security focused, right? And we see that from the core devs, you see it from the applications built around it. And so I think security is in a good place, and I think it's really about ongoing improvements. I think Lightning still needs more hardening, more security robustness. I think that comes with time and size, and I think that's something we're going to see over time. And I'm also interested in seeing just, they're doing improvements in making nodes have, better bandwidth, lower bandwidth requirements to run. A lot of it, people say that Bitcoin's not innovating. It's mainly innovating to make what it already does well better. It's not trying to add new junky features. It's trying to say, okay, this is already great. How can we incrementally make this great thing even better, slowly and securely over time? And then apart from that, I think I'm glad to see that multi-sig is getting easier for people to use. There are a lot of now. It's becoming more commonplace and more accessible. You don't have to be like a cypherpunk to set up a multi-sig. Years ago it was harder to do. So I think we're seeing that's becoming more accessible, and I think that's an important part of long-term security, especially when you have substantial amounts of Bitcoin. So I think we are seeing a lot of development there, and then I'm also kind of watching the development of like custody solutions, things like Fedimint or things like that can add privacy to the network and that have different trade-offs.
Talk to us a little bit more about that for folks. I don't know. I suspect a lot of people in the space have heard of it, but probably don't understand technically what's kind of going on there.
Well, that's a long story, but basically 40 years ago, one of the early cryptographers figured out this thing called blind signatures. And basically, it's basically a private custody solution where even the person managing the custody of your assets doesn't know really who their customer is or how much money that they're bringing in and out, and yet they can still do it. And that didn't really go anywhere because it didn't have network effects, right? And people didn't care that much about privacy. But there are some developers in recent years that have kind of resurrected that idea in the context of Bitcoin and said that in some contexts, obviously you want to self-custody as much Bitcoin as you can when you're ready, when you know how to do it. But there's some people that, they prefer custody or they like the privacy solution of this. And so it says, okay, if you're going to custody, here's a more private way to do it. And so the Fedimint protocol is basically a way to take those, they're called Chalming mints or blind signature technology, apply it to Bitcoin, and then what you get is a bunch of small private environments for Bitcoin to operate, and it increases both the scalability of Bitcoin and Lightning, and it also increases privacy of Bitcoin and Lightning. And so it's kind of another tool in the war chest for making Bitcoin more usable, more accessible, and you can kind of tailor your usage for it for what you need, right? So some people prefer that custody, and some people obviously want to self-custody. And I like that that's kind of adding to the mix, and I think we're going to see more of that internationally. I think that we're going to see more of these communities pop up, and that some of them are using better privacy. Because one of the downsides, one of the kind of the few technical limitations of Bitcoin is that it's not super private. So for example, if you're using a custodial solution, and then you go and you spend your Bitcoin, the person custodying can kind of track everything you're doing. It's not ideal. Whereas with that type of Fedimint solution, it's an open source protocol, so there can be multiple implementations of it, but they can then shield that privacy, so you can spend from it, and even the organization doing the custody doesn't know what you're spending. And obviously that can have regulatory issues in some countries, but we have to think globally when we think about that, and think about it on a smaller scale.
Lyn, you recently wrote one of the most comprehensive articles on the Lightning Network. And I know from just writing things from time to time, I learn a ton by just writing about the topic that you're going through. And sometimes you just have this aha moment. You're like, I didn't expect to kind of discover this as I'm sorting this out myself. So my question for you is, when you were writing this very comprehensive article about the Lightning Network and kind of where it's at, did you have any of those moments? And if so, what were they?
Well, a lot of that was me learning, right? And I reached out to developers to talk to them and ask questions, and major node operators, and say, is this how, this is my understanding, is this correct? Or what would you add here? And, basically, people that come into Bitcoin obviously come at it from very different backgrounds. Some people come at it from a computer science background. Some people come at it from a macro background. Some people just want to use it, right? And so for me, the challenge is that although I have an engineering background, I don't specifically have a computer science background. I know enough code to kind of get the idea what I'm talking about, but it's it takes me extra work to really dig into the software details of things. And so I spent a lot of time on Lightning, really kind of going down to the nitty-gritty. And so for me, it was just a whole process of learning how it works, what the limitations are, what the advantages are. And for me, the most interesting aspect is not the technical part, but really the macro part, because I like to study network effects. So, if you look at things like major stock exchanges, why do they stay the same exchange for centuries? Right? So, why did the New York Stock Exchange never get replaced? Why is all commodities and option trading? Why is Chicago such a big market for that, for example? Once you build an exchange, especially a traditional exchange, it stays around for decades or potentially centuries because you have that self-reinforcing network effect. And what's cool about the Lightning Network is that after the first early years, where it was more challenging to use, you're seeing liquidity build up to such an extent. There was so much channels now, it's actually a much more usable system. And then as it becomes a more usable system, more people join on, and that makes it more usable. And basically, it's got years of development now that's built in place, and it's now that flywheel's in place. And so I like to kind of look at it more that macro lens. And for me, then I go down to the technical level only after I'm already interested. And I'm saying, okay, let me make sure how this works. So for example, I spoke to Steve Lee about privacy. I speak to, Elizabeth Stark about liquidity and other details like that. I kind of reach out to different developing countries, companies of the network to understand what's going on and what the nuances and what the differences are.
All right, so this one, I suspect it was covered quite a bit on this conference, but I got to pick your brain on the FTX news. In general, from a very high level, what are your pros, cons, just general thoughts?
So I think obviously in the near term, it's rough. Bitcoin price is down. We're here at a conference and we're in a deep bear market. So thanks for everyone for coming out. Bitcoin's dead. Everybody go home. Just kidding. So obviously it's not great for price in the near term. And if anything, it's funny. We've seen in the past week, we've seen kind of a rally in a lot of assets because we had sort of a top in the dollar index. Inflation came in a little bit lighter than expected. And that allowed a lot of things like that Bitcoin's been somewhat correlated this year, like gold and the NASDAQ, for example. They've rallied hard. And Bitcoin probably would have rallied pretty significantly this week if not for this industry-specific debacle. So it kind of sucks, obviously, in the near term. But I think in the long term, it almost couldn't happen any other way. That this kind of malinvestment, this kind of leverage casino stuff has to blow up. And it sucks for the users. But I think it's part of the process. It just has to be done.
When you say it has to, are you saying it has to because this new system that's being constructed is incompatible or of just such a different nature than the old legacy system, or why do you say that?
So I think malinvestment, by definition, has to die eventually. Otherwise, it was not malinvestment, right? And so if it is malinvestment, and I think we all agree that this was potentially fraud in addition to malinvestment, but so this was like a double whammy, right? But if you have malinvestment, it has to die eventually. And things that are just heavily built on speculation die eventually, especially if, like I said on my prior talk up here, that it's one thing to gamble and know that you're gambling. If you go to Vegas for a fun weekend, sure, have fun. The risk comes when people don't realize that they're gambling and they're gambling. And so I view most of the kind of like FTX and similar things as almost like an extension of fiat. It's like late stage fiat. They took a lot of fiat ideas like leverage and the necessary of interest rates and kind of brought that into the quote unquote digital assets realm. And I think that the actual innovation is Bitcoin. The actual innovation is true decentralization, hard money, censorship resistant transactions. That's the innovation. And like 99% or more of what we're seeing out there. There's interesting experiments, but anything that involves tokens and seigniorage and speculations and leverage is just it's a scammy fiat kind of industry built on top of it. And it kind of has to blow up. And actually, when I was up here before, Alan Farrington made a good point that it kind of has to blow up together due to how interweaved we all found out it was. Now, there could have been a different timeline where there is more sideload leverage. It didn't have to be this interconnected, but it is natural for these things to develop like this. But because it turned out to be so interconnected, it kind of all had to fall at once, unfortunately.
Personal responsibility is back and strong in this community, and if you're against that, you're probably not going to like Bitcoin, right? If you had a message for policymakers that have maybe seen this explosion with FTX this week, I know Michael, I don't know if he's in here, but gave an incredible CNBC recap and was really laying out what seemed to be some talking points for policymakers with respect to commodities and securities in this space, and there only being one that's a digital commodity. What are some of your thoughts, and do you have some words of your own if a policymaker was maybe listening to this?
I think the first step is to understand the difference between Bitcoin and everything else in the space, right? So Bitcoin does not pass the Howey test, which is, I know it's jargon for some people, but basically it's a test that's been around for many decades to determine if something is a security or not. So Satoshi didn't raise capital. He just kind of put this open source code out there. He didn't pre-mine it himself. And there are multiple things. If you go through the step-by-step list of the Howey test, Bitcoin clearly does not pass it and therefore is not a security. Whereas when you apply that same test to other cryptos, the vast majority of them seem to pass that test and are likely securities. And some of them have been specifically ruled to be securities. Other ones is still technically gray, but when you actually look down at the list, you're like, it's probably a security or basically an equity. And so I think we need more clarity from exchanges, and I would agree that Michael gave a good talk about that. I think we need more clarity about regulation onshore, and I think the main thing is for policymakers to understand that Bitcoin is very different from everything else in the space, and that its nature is not inherently speculative in the same way that other things are. Right, so you can speculate with Bitcoin. Many people do speculate with Bitcoin because it's a volatile new asset. People are going to speculate with it. But the underlying use case, why it was designed, and the way that many of us use it, is not speculative. And I think I think we're going to see a bigger and bigger divide between the Bitcoin-only space and the rest of the crypto space. And I think over the past couple of years, with the rise of Bitcoin-only companies, we've seen that divide growing, I think, and it's only going to trend. And of course, there are other things like stable coins and things like that that are interesting too. But outside of, say, Bitcoin and stable coins, I think a lot of the other part of the space is really going to be delegated to the realm of casino land. It's things you're speculating on, and I think a lot of that's going to be, I think we've kind of seen potentially, and this famous last words, I guess, but it's like we've seen, I think, the high watermark in terms of how much speculation that can happen at once in this industry.
I hope so. I hope so.
Well, I would tie it into the prior macro thing. We've had 40 years of lower and lower interest rates. And towards the end of that cycle, we hit zero interest rates, and we gave everybody free money. And we had this huge, 40% increase in the broad money supply in 2 years. And then you have this rise of all the scams. It's really hard to mimic all those conditions happening again. So famous last words, but I think that we're going to see more bubbles, obviously. Bubbles never end. But, it's human nature to find bubbles and create bubbles. But the sheer size of this latest crypto bubble is really hard to replicate. And I think it opened a lot of eyes to the dangers of most of this space.
What's one of the most important things happening right now that you think doesn't get much airtime or that people just aren't talking about?
It's challenging because if you asked me that a year ago, I would say energy. That I thought energy was dangerously understood. And I think it's more obviously understood today, but I still don't think it's understood enough. And I think when you think about inflation, you have to break out energy from everything else. I think that things like cheap Walmart goods might stop inflating at the same pace that they have been for the past couple years, but I do think that energy is still going to be a problem. Getting affordable, cheap energy to the world, I think, is going to be a decade-long challenge ahead of us. And that some of us are in privileged areas and it's easier for us, but other people are not. And for example, most of us are aware of what's happening in Europe right now with the energy crisis, but what a lot of people don't realize is that when Europe goes out and buys more liquefied natural gas to replace their, shut-off Russian gas, the question is, who's getting less liquefied natural gas? Because it's a pretty tight, finite market. There's only so much capacity at the current time for liquefied natural gas, and more of it comes on slowly. And so when Europe buys it, it's crowding out someone else. It's crowding out those periphery countries that can't outbid Europeans in terms of getting that. So I think that's number one. And I think number two just might be, and I guess tying this back to Bitcoin, I think a lot of people, especially when they talk about Bitcoin, they don't think of it in an international context. They think of it as American or a European, and they think, why do I need Bitcoin? I have credit cards, I have PayPal. I mean, Bitcoin's volatile, why do I need that? Whereas it's a much easier sell in places like Argentina or Nigeria or Turkey or any other, multiple other countries where you either have, just structurally high inflation, just structurally weak currencies. Many of them have hyperinflation in their memories, in their generation, or you have more rampant authoritarianism where you have more arbitrary bank freezes, more arbitrary control. And so I think when people think about Bitcoin, one thing they completely misunderstand or underappreciate is that they have to think about it in a global context.
Who becomes a buyer of all these bonds? And I guess where I'm going with that is there an unusual buyer that emerges in stablecoins, and is that somehow going to act as a way to maybe fend off a central bank digital currency because maybe a stablecoin operator becomes a buyer that is a very convenient source of buying for central banks and issuers of sovereign debt?
Stablecoins have become one of the larger buyers of treasuries in recent years. I mean, they hold tens of billions of dollars in treasuries now, which is a small percentage, but it's not insignificant. And what's interesting is if you look globally, something like 99% of stablecoins, 99 point something percent of stablecoins are dollars, even though it's a pretty open market. And they could have been more diversified, but they're not. Basically, around the world, it's dollar stablecoins that people want. And so that is a source of T-bill demand, especially. So I do think that to the extent that market grows, that is an ongoing source of demand for treasuries. But I think overall, we're going to see essentially that the banking system and central banks continue to be the biggest source of government debt demand. And that's where you can get substantial inflation. And you can go through periods of time where they try to tighten, but I think that structurally, if we're looking out at the United States, for example, we're looking at a $500 billion deficit per quarter at the current time. That's the Treasury's current estimate for what their quarter 4 2022 and quarter 1 2023 deficit looks like. And so to the extent that trend continues, and there's no clear reason why it shouldn't, there's a lot of treasury supply that needs buying, and it's not fully clear who's going to buy it.
So do you think, and I know we have a minute left here, but do you think that the stable coins could, Tether, and are they the people that can come in there and maybe fill that void of lack of interest for buying all these things? Or
I think it depends. It's partially a regulatory question, right? So I think part of what limits their growth is regulatory uncertainty. Yeah. To the extent that they are given kind of a regulatory green light or path to acceptance and things like that, I think they can grow. But I think they're ultimately an intermediate tool, right? I mean, if you're in Argentina, you might want some stable coins for the next 6 months of expenses, for example. You don't want to have everything in say, local currency. Maybe you don't want everything in Bitcoin. But longer term, I think Bitcoin is the innovation. And stable coins are kind of this interesting thing that we've discovered along the way. And it opens up opportunities for the rest of the world, but it's a bridging tool.
Yeah. All right, that's all of our time. Lyn, amazing job.
Thank you. Thanks, everyone, for coming out.